traders, welcome to TradersHub Ninja. In this tutorial, we will learn about RSI Divergence. RSI Divergence is a concept used in technical analysis to identify potential trend reversal or trend continuation in the price of an asset. Types of RSI divergence. First one is bullish divergence and the next one is bearish divergence. RSI bullish divergence. This happens when the price makes lower lows but the RSI forms higher lows. It suggests that the momentum behind the downtrend is weakening and a potential reversal to the upside might occur. And the next one is RSI bearish divergence. Here the price creates higher highs while the RSI forms lower highs. This indicates weakening upward momentum and could signal a potential downward reversal. Now we are going to learn about RSI bullish divergence. Previously there was a strong downtrend in the market marked by lower lows followed by a pullback resulting in lower highs. The market continued in the trend direction making lower lows followed by a pullback which result lower highs. Toward the end of the downtrend, market was moving lower lows, but RSI was showing higher lows. What will be happening in the next? The trend will be changed into an uptrend. This pattern is called RSI bullish divergence. Market moving lower lows, but RSI moving higher lows. This pattern is called RSI bullish divergence. And the next one is RSI bearish divergence. Previously, there was a strong uptrend in the market, characterized by higher highs, followed by a pullback, resulting in higher lows. The market continued in the trend direction, achieving higher highs, followed by a pullback, resulting higher lows. Towards at the end of the uptrend, market was making higher highs, but RSI was displaying lower highs. Towards the end of the uptrend, market was making higher highs, but RSI was displaying lower highs. What will be happening in the next? The trend will change into downtrend. This pattern is known as RSI bearish divergence. Bullish divergence and bearish divergence. It includes strong, medium, weak and hidden. Market moving lower lows, RSI moving higher lows. This indicates a strong bullish divergence. Market make equal lows, RSI make higher lows. Here it suggests a medium bullish divergence. Market moving lower lows, RSI making equal lows. Here bullish divergence was weak. Market moving higher lows, RSI moving lower lows. Here bullish divergence was hidden. And the next one is bearish divergence. Market making higher highs, RSI creates lower highs. This indicates a strong bearish divergence. Market making equal highs, RSI making lower highs. It suggests medium bearish divergence. Market making higher highs, RSI making equal highs. Here bearish divergence was weak. Market making lower highs and RSI making higher highs. Here bearish divergence was hidden. In the next video, we will discuss bullish and bearish divergence using real charts. Subscribe to our channel to keep supporting with us for more videos. Thank you for watching.